Uchenna Menis, who is the managing partner at Blue FX Nigeria, is live here in the studios to have this conversation with us. And we'll be crossing all this over into London to get Julian Olayinka to give us the morning after the January 31st Brexit. Brexit has happened. We're now in the, what you call, the final lap of it, which is called the formal exit, the deals and all of that will be taking place between London and Brussels, as well as Frankfurt, by the way. Uchenna, good morning.
Good morning.
Welcome. It's a very interesting time. Hope you folks are not sweating it too much there on the vehicular traffic in Lagos. The stories and the images are already coming in as to what we're facing, so we need to get this as up as possible. Where are we with coronavirus right now? It was, let me check. We just gave a bit of a snapshot there. It's a new global market risk indicator right now. So we need to add virus. When we say we're looking at markets risk indicators, political risk, currency risk, market risk, whatever, we now need to add virus to it. That's the consensus we're getting.
It makes it quite fascinating, the things that we do, because I remember the last time we came here, we were quite confident based on the ongoing monetary policies from the global central banks and saying things are still going to pick up. We're seeing the purchasing managing index also bottoming, and we're looking at that positive, optimistic good outlook. But now we have a biological risk that no one really could fathom how to even propagate and also asset in terms of their portfolio allocation. So yes, we have to now start pricing in a new risk as it comes to this virus outbreak. It's actually now regarded as a pandemic, really, as it's starting to spread right now, and it's showing significant propagation speed beyond what has been experienced before.
So if we're looking at market volatility in general, adding coronavirus to it makes sense for you to understand and have a total picture of where it is. If you see how the airlines, the oil demand, oil prices and all of that coming through, now it's even hitting the metals market, which seemed to sidestep this when it all started. But it looks like gold, silver and other metals are taking a hit from this because demand, iron ore, for example, commodity is taking a bit of a beating, even with the Chinese right now.
No, but you need to understand how the Chinese economy is a significant epicenter to globalization and global trade. It is shut down, Borson. It is shut down. So you're going to expect the hit across asset classes significantly. And that's what we're seeing. That's what we're seeing. Things, oil prices, in terms of demand, the Chinese contribute about 20%, and that's been down. And we're looking at their iron ore also contribution to global supply. It's also significant the hand they play in this regard. Yes, the Chinese economy is shut down as a regards of this coronavirus, which apparently Wuhan was the epicenter of this propagation.
How should investors price in this risk quotient in their portfolio right now, whatever asset class they are trading?
So it's first, you need to be very cautious with going into risky asset, high yielding asset. You should be looking at the safe havens right now in terms to be cautious. The Chinese actually banned short selling across the weekend just to prevent, and the Shanghai Composite still dropped for close to 9% on the open today, to show you how much investors are pushing funds away from that space, given the fact that we don't know exactly how to prepare for this and the extent that...
Try to cut short selling, pumping about $170 billion into the market, try to keep things from overheating. Yeah. That's what the PBOC tried to do in the last 24 hours.
It could have been really worse if they didn't take those steps. It could have been really worse. And irrespective of what they did, we saw that 9% plunge, and we'll still continue to see market react in that regards to the coronavirus. Boston is something that is entirely novel. Nobody knows anything, honestly. That's the fact. So we have to prepare cautiously and also be ready to mitigate this.
So the entire conversation around our outlook from the IMF, from the World Bank, from the IMF World Bank final meetings in October last year in Washington, and all that we had from Davos this January, it looks like we are left with something new. We're facing something new here. So whatever permutations we all came into the new year with some measure of sublime optimism. This coronavirus is changing this altogether, because when China hurts, the rest of the world hurts.
You hear some people compare this to 2003 during the SARS outbreak, but then China was contributing to about 3%. Now China plays about 16% to global growth. It is
And it's
huge.
now number 2.
Yes, it is huge. So yes, we are going to see that effect. China slows, China sneezes, the rest of the world catches the cold, and that's yeah.
This is coming at a very inauspicious time. The trade deal with Washington was just inked. And when the Chinese folks thought, look, let's just go back to Beijing and get down to work and put this into play, then see how we get the part 2 or the phase 2 done by December, according to President Trump, after the U.S. general presidential elections in November this year. So this is cutting the Chinese right in the middle of how to move forward with the new trade deal and how to deal with this coronavirus and still retain their number 2 position, while everybody is saying, look, China, what are you doing about this? Can you contain this from spreading globally and causing more damage than expected? Look at the airlines right now. Those folks are at the front line of this entire epidemic.
Yeah, and we can see not just the airline, you can see slowing down across all transportation index. The Baltic Dry Index has shown significant slowdown, saying that even the freight transportation angle and perspective has actually been slowed down. So yes, Paulson, it is quite huge what the effect of this would be. And China is trying its best to contain it, as they say. But the trade deal right now is secondary. You can only have a trade deal.
I haven't heard about it in the last 1 week.
You can only
have talking about the trade deal.
You can only have a trade deal when people are alive to work with it, right? So it's quite significant where this is going to be.
So you think the Chinese have taken the trade deal and lock it up in a drawer somewhere?
Yes, because the virus is having that geometric propagation speed. We are looking at about 15,000 or about, and there is that report that this might be unofficial. Things are being kept in a very, should I say,
to moderate panic.
To moderate panic. With that, we're saying by the end of February, we might be getting to 250,000 if the graph continues to move in the same
And the number of deaths, body bags is also
increasing too. So, and the fear too, we can also see the emerging space getting that sort of panic mode too. We're seeing that portfolio moving out in that space because people are getting to understand that the developed markets probably have the infrastructure to curtail this. What happens to places that are developing, places that don't have the necessary outfit to combat such spread of virus like this? So yes, we are actually looking at a novel risk, and every portfolio manager, market participant, asset managers need to really start planning accordingly to this.
So how safe are the safe havens right now?
Yes. That is a very valid question. That is a very valid question because it gets to a point where the safe haven might not also be able to hit up in that regards in terms of what the outlook is if we don't want to think about the worst case scenario, but it gets to a point where the safe havenness would also break.
Yeah, not too sweet story on economic numbers from India, which is another economic powerhouse, globally speaking. Yeah. And looking out through the weekend, the numbers aren't looking really good for India as well. So if you move from China, you move to continental India, and you're beginning to say, okay, perhaps we have a safe haven here. India, because for the gold market, for metals, for crude oil and the derivatives and all of that. So, where is the next destination is where I'm trying to figure out here. If you're moving all the way from east and you're getting to India, and now we're coming to Europe. And
you need to understand that India has just released a report looking to add additional liquidity to the system through the fiscal stimulus, about 150 billion thereabout, given that market reports and data that came up from that space significantly slow. So this is not even a virus thing. This is a global slowdown in terms of the growth, should I say, curve in India. Okay,
Uchenna, hang in there. Let's take a break. We'll be right back. We'll cross over to London, and we want to have a bit of your voice into what Julian Olayenka is bringing in from our London studios. Stand by, everyone. We'll be right back in 2 minutes.